This week we have several biotech companies going public, and the key thing about these companies is that they all have collaborations with some very big names. The first one we're going to talk about is Bind Therapeutics. This company is hoping to raise roughly $100 million, and they've got some big name partners like Amgen. Joining me is Director of Research at Equities.com, Francis Gaskins. So Francis, Bind, again, you've always said that if they've got these partnerships with these big names, that's a good sign.
Right. Bind is based in around Boston, Massachusetts, and that's where some of the other companies that have targeted cancer are based. And that means that they have a good source of intellectual, people working for them, intellectual property that walks in and out of the door. But they have patents, they have collaboration, and this is a very, very buoyant IPO market right now. And so, just if you know a company has collaboration with big name partners, deep pockets worth, the market cap's very high. If the price to book value is not too high, then it's okay to take in the IPO and watch in the aftermarket.
Then the next one we have is Accelerant Pharmaceuticals. This company is also in the cancer drug area, and they are collaborating with Celgene. So how do they look? They look like they're going to try to raise about $65 million.
Yeah, they've raised a couple $100 million in collaboration revenue, which is amazing that they can do that much. The problem, of course, is that they're not too far advanced in the clinical trials, and so we're betting that if you buy the stock, you're betting that the big companies can take the product, that it'll have successful phase 2 trials, phase 3, and eventually get approved by the FDA. So there again, the price to book value is not too high, and they have the collaboration, so I think that will do just fine on the IPO.
And then the final one that we're going to talk about is Fate Therapeutics. This one is more on the blood side of drug discovery. Specifically, they've got some umbilical cord blood projects that they are working on. What do you think about this one?
Well, right, this one's in the hematological area, and that's an area that where some of the drugs that are up, they're approved to treat the symptoms but not the cause. And what this is one of the companies that's trying to get to the root matter and treat the cause of the underlying problem, which would put the cancer to sleep. It doesn't cure it. You can never cure cancer, but it would put it to sleep. They're a little bit, they can come public in this market because of the collaborations and the price to book value. They're a little bit at an early stage. So if an investor wants to participate in that market and they could get in the offering, it might be a good longer-term hold. It's really hard to tell when companies are in the early stages of clinical trials.
Right, and they are collaborating with Becton Dickinson, this one. So we will keep our eye on these. Healthcare stocks have actually done fairly well performance-wise in the IPO market. Hopefully these three will follow along with their peers. That's Francis Gaskins, and I'm Deborah Borchardt with The Street.